everybody. Welcome back to Mortgage Ballers. This is Rich Hanlin, and you see him sitting right there, straight out of Texas, Mr. Braxton Gregg. Thanks for coming on the show today.
Thank you for having me.
Well, I appreciate you taking the time. I know it's right in the middle of the day. You're only, what, an hour difference from me in Georgia, in Texas?
Yes, sir.
All right. Ooh, whoa, where did that sir come from? I don't even know.
Raised a little different, I guess. We're Southern here.
That's a Texas thing, Rich.
Yeah.
Now, you did tell me that you are a transplant Texan with quite an extensive background, working your way through a lot of the same stuff I did. And how long have you been in this business?
I've been in the business since 2007.
Okay. If anybody remembers, for a little history lesson, what month, 2007?
March 31st, 2007 was my very first day at IndyMac Mortgage.
All right. Does anybody remember what was happening in 2007 that led to the 2008 crash? A lot of interesting things are happening. And so a great time to get in the industry was right before the crash.
Yes, it was fun. It made my life interesting, but you got to learn a lot. You got to see a lot of different types of things, and I believe it helped me grow in this industry quite a bit.
Well, I'm with you. I see a little bit of that gray right there.
Definitely a lot of the gray.
It'll do that. And if I take my hat off, believe me, you'll understand I'm on the other side of it too. It's 35 years in a blink of an eye for me. I'll be 35 September 1st, 1991. So I still got a couple months, but I'm not kidding, Braxton. It's gone by fast. Life's gone by fast. This industry will take you in, spit you up, and it changes all the time. I remember before AUS was out, I remember doing everything electronic. I remember pulling credit reports on these stupid little like data paper things, appraisals with, pictures glued on, 3 sets. The industry has changed a lot, but yet it hasn't. It's still about using your programs, finding lender relationships. People say, why do you have so many lenders? I'm like, cool, because my people asked for it, but I only use 5 of them. I use 6 of them. I figured out it was 6. I only deal with 6 of those lenders because I've known the AEs for damn near 35 years. So I trust them because I do mostly purchases and I have to deliver, and I do not experiment with people's purchase transactions. But I can get a 0.25% better on the rate today with this lender I've never heard of. And I've done one deal, and you think they're going to bend over backwards for me? I have no one to call. So I'm a little bit different, but I do originate, and I also do real estate. I have real estate both California and Georgia, mostly for myself. I'll be very honest. I work, most of my business is investor business. I've had some investors for a long time, and with the DSCR loans, that's become a big deal for us here. What kind of loans do you specialize in? Do you do it all, or what do you look for?
So I am purchase pretty much only, and I mostly work with first-time home buyers, complicated files. I was an underwriter for a long time, so I can get mostly different things that most people wouldn't know, or guidelines that they hadn't applied yet. So I can do that. I do some investor loans, some DSCRs. But my main focus priority, I love first-time home buyers, and I love doing purchases.
Yeah, I agree with you. Believe it or not, up to the crash, 1991 to basically December 31st, 2007, I was refi only. That's the way I came in the industry, and that's all I did. I was good at it. But one thing I learned after that, as I had to reinvent myself, was there's always purchases. Somebody's hardship becomes somebody's blessing over here. I don't like that, but there's usually something going on somewhere. And I've learned that from the investors that I've worked with over the years. They're like, I don't worry about rates. I worry about return. If I can hit my return, I could always refinance it later. And everything's just different and slower. They're not afraid of owning house. I got one guy who owns 100 units. He's like 89 years old, and it's like a game to him. He's always replacing one with a 1031 exchange if he can find one that's newer, better, something like that. He collects all of his own rents. He does not use a property manager. He loves going out there. Bill he drives an old beat up white truck, and out of all the people I know in my lifetime, and people I know, say it that way. Obviously, Matt Ishbia is way off the thing, but I have a business relationship with him. But someone that I know on a closer relationship, this guy has mentored me left and right. I'm not even his son, but I have gained so much knowledge from him in becoming a better investor myself. because here I am doing it for everybody else. Why not do it for myself? And so the last 8 years, diving in and just talking to them. And now I don't collect my own rents. I can tell you right now, there ain't enough time in the day for that. But who are some of the mentors that you have in your life or have had in your life?
So my big mentor was Steve Munchin.
I know that.
Yeah, so he Treasury Secretary, owner of IndyMac in One West for some time, I believe.
I want you to say that one more time. The first part. Who is Steve Munchin?
Treasury Secretary of the United States under Donald Trump, the first
of America.
That's correct.
Yes, let's make sure we say it correctly. Like, that's a pretty good mentor. Keep going. I'm sorry for interrupting.
So that a gentleman named John McClellan here in Austin, he's been on the radio for a number of years. Great guy, deep wealth of knowledge. And then my family, I have a number of investors that I've dealt with, one of my uncles and my father as well. So I learned to take a lot from a bunch of different people and be able to apply that. Especially the other one that I really actually like is I worked for a time with Churchill Mortgage and Dave Ramsey.
Yeah, I know exactly who they are.
So Dave really helped me, focus on. I like to get people out of debt and get them in a better place financially, and I found his course is a great way to kind of get people started and get them into the philosophy of thinking like an investor, thinking like a businessman. Just with your own personal finances.
Believe it or not, I actually reached out to Churchill. I didn't know it was part of Dave Ramsey at the time. Maybe I did, but I figured it out. I went there and I thought, hey, I'm a broker and I have people like, are you guys a lender like that I could use? I thought it'd be pretty cool because they talked about leads and different things. And I was trying to do it and we were comparing, but they really wanted me to come under them. And at the point in time, I was like, oh, whoa, no, I'm not looking to do that. I'm happy, but we were talking about my model versus theirs and things like that. I'm amazed. Dave Ramsey's into everything. Number one, it was interesting. I didn't talk to Dave Ramsey. I talked to the person that ran the Churchill side of it. I was like, wow, he's got a very captive audience. So he has insurance, he has real estate agents, he's got loans, and people get mad at him. I'm like, well, why wouldn't you do it? If you're trusted, it shows how our industry is. If you can pass trust from you into somebody else, they don't shop, right? That's why most people will use the first person that their real estate agent says, this is my guy, this is my gal,
Yes. And with Dave Ramsey, what I found is first, Churchill doesn't own it. They're two separate companies. They just happen to grow. The owner of Churchill and Dave Ramsey were best friends growing up.
There's a money connection there.
Money connection. Huge money connection. The leads are quite expensive. But what I found with that is all of his customers do transfer that trust to you. That is a big plus. Most of them don't have credit scores, so it's a little bit different of a loan that you have to do. A little bit rougher in some ways, easier in others. But it is a great way to build trust. And being able to show someone going through the system, paying off your debt, it takes such a load off of someone's plate and makes them feel so good about themselves that it's a double win. I not only get to help you on your house, but I also get to help you pay down your debt, find a way to get some what we call mailbox money, and start building wealth, which I believe is the first step in home ownership. It's kind of your path to wealth.
I agree. It's a big path. So many people try and do it the other way. Well, I'm going to get the nice cars first, and then my wife's going to get a nice car, and then we're going to get the the timeshare. Oh, now it's time to step up and get the big thing. It's like, well, debt ratio wise, we did it backwards because this is all you can afford now. What? I won't live like that. One of the best things I ran into was a young man. I've helped his mom a lot, and she's helped me. She's a escrow officer in Northern California. I've known their family forever, but the kids started getting to the age and they wanted to buy a house, and he told his mom, she's like, he's yelling at me right now. He's so upset. Mom, why did you give me such a good life? I just found out I can't even afford to live in the same neighborhood I grew up in. And I'm like going, no kidding. Like, your mom's like one of the top escrow officers in the United States of America. Yeah, you're not living in that neighborhood, not start out, but I can get you, let's go two cities over. And at the time it was like Roseville, California versus Rancho Cordova. I said, just give me 2 years, right? And he ended up buying a house, and he dropped like he bought a 4-bedroom house and 3 friends in their house hacking, and they were making his payment. I'm like, do you understand how far ahead you're going to be in just 2, 3, or 4 years? And it was just funny because that's the first time I ever ran into that, where someone was complaining that their parents had given them too much in life.
Yeah. Well, it does happen. I grew up a little spoiled myself, and I remember first getting my first water bill and trying to figure out, like, calling my dad, like, wait a minute, they charge you for this? I didn't understand that. But yeah, it's one of those things you don't realize when you're a little privileged growing up.
Well, my parents used to remind me, like, could you close that refrigerator door? You need to know what you want before you open that door. Could you turn off those lights? I remember my stepdad woke me up in the middle of the night one night. It's like 2 a.m. And I'm like, waking me up. Rich. You left the light on out in the garage when you were checking your laundry before you went to bed. It was like 8 o'clock. I'm like, that's like 4 hours ago, 6 hours ago. But he had been out there working. But he said, I'm like, why didn't you just turn it off? You were out there after me. Well, you wouldn't learn anything. So therefore, I'm waking you. I thought, gee, thanks. I appreciate it. I learned. I never left it on again. Believe me, I think I broke the light so that nobody could turn it on. Talk to me about this, man. I'm glad we're talking. This went way different than a lot of my structured stuff, which makes it even better for me. Are you 100% on your own, or do you have a team that you work with? How do you do your business?
I am 100% on my own. I
Okay.
pretty much handle everything myself, from processing to closing it out. I like keeping control of it. That way I can
That's an
mitigate.
underwriter for you people.
Yeah, I can mitigate costs. I know what I need to make a file work, and usually I only have 2 or 3 conditions once I initial submit, so it's not an issue. Plus, I love, especially UWM. I love being able to close so fast. I think I average like 4 days right now, so that's pretty good.
That's awesome. If you had to pick, what's your I'm not sure if I asked you this, but what's your favorite borrower to work with? I know it's purchases, but is it just straight up first time home buyers? Is it people buying that next house? What-
I
Or
really
anything purchase related?
pretty much anything purchase related. I really like working with first time home buyers because I get to set them on a path and kind of give them a plan. What I try to
Okay.
do with each closing is I give you a plan to pay off your mortgage a little early, whether you're throwing $50 on it, $100 on it each month. Show you a little calculation to show you what you're saving in interest, things like that, and then give you a plan to pay down debt, things like that. Come back to me if you're looking at investment properties. If you're looking at anything, always feel free to give me a call. I'd love to give you any advice I could. I happen to be in tons of businesses, so I can help a little bit with everything, whether it's from running health clubs to storage facilities. I've kind of dabbled in a little bit of it all.
How about oil and gas?
Um, I have a guy for oil and gas. I have oil and gas. My guy for oil and gas is, you were talking about Bill, the investor. So he is probably one of the wealthiest guys I've ever met, and he drives the most beat up truck, wears overalls, and I've watched him. The amazing thing about him is if you do business with him and do well, he will literally call you up and say, "Hey, um, I bought you a moving truck. You were a great mover for me. I think you should start a company on your own. Here's the truck to start you out. Have a great day. I think you'll do well in this business." So I've been impressed with how he treats people, and I think hopefully that's rubbed off.
No, I like it. Truth is, I'm where I'm at today because somebody saw whatever they needed to see early on and said, "Hey, you know what? Have you ever thought about this, or this?" Like, well, no, I haven't really thought about that way. No one in my family's ever done real estate and things like that. Well, that's not true. My aunt did it, but I didn't really hang out with them much after my parents got divorced. So I was going to be a lineman. I was going to climb utility poles because those were the people I knew in my hardworking neighborhood where I lived, that if you worked hard and worked all that overtime, you could make $100,000 a year. And I was like, oh my gosh. And that's a job for life. You're going to end up with a pension. These guys, man, they were driving the nice trucks. And I thought, that's what I want to do. And so during my summers during college, that's what I did to get my tuition. And in probably a 3-year period, I probably ended up with more skin cancer working outside day in, day out in Southern California, cooking my rear end off. But I enjoyed using my hands. I enjoyed, you do a lot of construction stuff, whether it's underground, above ground. Um, really cool job, very dangerous, as I found out later. But I figured out really quickly that I'm not made to be outside every single day. My skin's a little bit too pale for that. And so very thankful that I was able to work my way in, and I started as a loan processor. And that was probably the best entry point for me because I was in a place and they said, look, loan officers bring in loans. You pull the credit. You call the customer back. You sell the loan. You tell them everything that they need. You close the loan. They're just going to keep bringing you people. And I got really good. I mean, I knew all the lenders that we had. I knew their guidelines back before AUS. It quickly, I had 60 deals going at any given time. You're overworked. You don't have time to think about it and worry about it. You just do. And it's like calling leads. You just keep going till you get numb to it. And then all of a sudden you get really good at calling leads. The rejection just means good. Get me off the phone fast. Okay, next. You don't need to talk for an hour if there's nothing there. Burn and turn. That's the refi business. That's not the purchase business. Purchase is about nurturing. It's about when I got into purchases, Braxton, now I'm doing 3, 4, 5, 10 loans for the family and the friends and the referrals, giving them, but those skills carried over because if I don't want to waste people's time. I know if there's a loan there, and I tell people anything that you paid for, if I don't get the loan right, I'll reimburse you. You're out nothing. If I'm that stupid and you think I'm going to burn you, here's my guarantee because I don't get it wrong. And that has lived with me. My word is my handshake. It's just electronic nowadays, right? So crazy. All right, tell me this. I'm sorry, go ahead. You're going to say something.
Whereabouts in Southern California did you grow up?
I grew up in San Bernardino, California, went to school, San Bernardino, Cal State San Bernardino. After that, I got drafted by the Seattle Mariners my senior year out of college. I played one season of minor league baseball, so I was a starving college student, became a starving minor league baseball player. And then I went to the real world where people work. I started working for that company that I'd worked all Southern California Edison Company, but quickly realized I wasn't going to make it outside. And the woman I fell in love with at college, she had moved to Northern California right when I was playing baseball, and we were having a long distance relationship. I'm still married to her today. Love my wife, Cam. And she's dealt with a lot with a mortgage broker. But that's when I went up there. I didn't really have a job. And I just said, hey, I'll start as a loan processor. I don't know how this does, but I know math. Let's try and figure it out. I just knew Northern California. That's where she was at. And so I spent from 24 and a half all the way to 3 years ago before I left in Northern California. But now I'm in Georgia as of February 1st, 2022, when we started this company.
Well, so I grew up in Pasadena.
Okay.
So I grew up
Rose Bowl.
Yeah, right by the Rose Bowl. My dad was a minister most of my life. A guy in our church invented the life cycle and started a company to sell the life cycle, which was called Family Fitness. So I started
Never heard of that.
Yeah. I started out as 12 years old selling gym memberships door to door. So I've always had the sales part of it. Until I moved to Texas, I was always in the gym business. I fell into the mortgage industry kind of like you. I came out here, figured I had my retirement taken care of, and times changed, and I realized I needed to actually work. Mortgages kind of came out handy.
Alex, do you know who Alex Hormozy is? I might not be saying his name right.
Not off the top of my head.
This guy is phenomenal, but he's always wearing a tank top. His hair's all messy. Looks like he just woke up. He's got a little thing on his nose, but he's worth about $100 million. But he figured out early at life, about 17, that he could sell gym memberships. He was kind of a bodybuilder. People would ask him a lot of questions. So he was answering so many questions. The guy at the gym said, man, why don't you work here? Maybe we can get some payment on it. But then people start asking more questions. And he's like, gosh, I got really good at selling gym memberships. And then I could teach older people how to do it. So then I figured out, because people would say, God, how are you guys growing so much? Well, I got this kid over here. And so they started hiring him out to other gyms, and he started selling their memberships. And finally he said, how about I buy my own gym? And then he started his own thing. Then he bought other people's failing gyms. And then he sold that whole thing, but the guy's worth about $100 million, and he wears flip-flops to work every day. And it's just an interesting story because very early in life, he figured out that he knew how to do one really good thing, which was sell gym memberships. And he just tore it up. So it's interesting that story you talk about
Yeah.
because
Well,
I know that story.
what's great about it is, at least how we used to do it was when you were the manager, you owned the club, and you were responsible for all the overhead. You kept what was left over. So I think my first club was I was 16, and you're watching the front desk, making sure that you learn how to run your business because everything comes out of your pocket first. And it was one of the greatest experiences as far as learning how to sell things, learning how to talk to people, and how to run your own business, kind of all at the same breakneck speed in the 80s and 90s of gym sales.
Yeah, definitely. All right. So tell me this: you're in Texas. Um, every now and then, I think you get to take your loan hat off. When you're not doing loans, what does Braxton Gregg like to do?
So I have 4 children, all adults now, so that it's a little bit different. But we
Okay.
love hanging out as a family. I'm also elected official here in Austin, and I love spending time in the community and going out and doing community events, going to our local library, doing things like that. Occasionally, I do some speaking, but that's kind of my wheelhouse. I really enjoy helping out in the community.
Well, you're my first elected official that I'm aware that we've had partner with Xpert Home Lending. I'm hearing a lot of things. We don't ever get to hear that part. Let's see, we have a singer. We have a guy that's adopted 4 kids, him and his wife, and they're very young. What was the one that we had? We have a Rubik's Cube speed champion. Well, he's upset because he can only do it in 8.93 seconds. Apparently, that's not number one.
Okay.
We have triathletes. I mean, I'm just laughing because I never get to see this side of everybody of who they are outside the loan side. But that's the side that people are going to relate to because we're all just loan people, right? When when people look at us like, oh, another loan person, they're just going to sell me. It's like if we could lead with the other things and we could align with other people within those things that we like to do, there's a community within a community. And it's like we don't need to be trying to sell all the ice skaters, if I'm a golfer. Stay in your lanes and know your lanes. Now, I do a lot of different things, but when I say a lot, I have like my 10 avenues, but it's not 100 avenues. I've tried to do the 100. I tried to join every chamber of commerce in Sacramento County, and people are like, why are you here? What do you have to do with this community or that community? And I'm like, I'm just here because they welcome everybody, good and bad. Some people took it wrong and said, you shouldn't be here for the Asian community. You shouldn't be here for the all black. And I'm like, well, why not? Maybe you should give me a little bit of guidance because I am here and I do want to fit and I do want to learn your cultures or your fear, your problems. I don't see it that way. I deal with everybody, so why not dive in? And I did that for about 2 years. Because I had gotten it at 2008, I became a financial advisor stockbroker, and I dove in that way. Well, believe me, it's not the best time to get people's money in the middle of a crash. So I did a lot of networking and I made a lot of friends. And that's when it reminded me of what my favorite thing to do is. I enjoy people. A lot of times my wife and I will go, we like to sit at the bar at place. Number one, we can get in faster wherever you go, but I like talking to people. Hey, how was your day today? People just want to talk and we enjoy it. I enjoy people and I love talking about anything. And I love hearing the pulse of the people around me. Like, oh, I'm having a bad time. I heard a conversation saying all these people coming in from outside of Georgia, they're running the values up. I'm never going to be a homeowner. And she goes, what do you think about it? And I said, well, I'm actually one of those people, but this is what I would challenge you to do. You're not going to stop it because it was a blessing for me to get here from where I came from financially. And for this reason, this reason, people are going to keep coming. My challenge to you is, had you bought when you first thought, we would be driving up your value. You need to buy today, stop complaining about it, and let them drive your values up. Believe me, you won't complain another single day if you're benefiting from it. It's only while you're looking through the window that you're having a hard time with it. So she didn't really like it, so I bought her a drink and we had an old fashioned together. But besides that, it's all right.
Well, it's actually, so I thought Texas was the only place that had that happen, because Texas complains about every Californian moving here, and I get a pass just because I started well before the rush, I guess.
Yeah, definitely do.
but I always explain to them, yeah, I did move here from a different state, but it's because of like you said, value everything that you appreciate about your community. We do as well, and that should be a privilege for you. And take advantage of it. We're gonna raise your price and make everything a little bit nicer for you as well.
Nothing's going to get cheaper. It never does. Do we have black swan events all the time? Who knows what the next one's going to be? God forbid if it's World War III or something weird like that. But I can't shy away from it. This is what I do. I don't want to just put people in houses. I want to put people in houses that they're going to be successful homeowners at. There's a reason why we have DTIs and debt ratio maximums, things like that. Some of those things still don't make sense to me. And based on how much you do with Dave Ramsey, he's even more conservative when it comes to what you should buy in maxes. But I love him in this sense. The way his debt snowball thought process. You talked about setting people up, just showing them $25, $50 on a mortgage in those first 6 years can save you a ton of money, and build it up fast. People don't realize how front loaded that mortgage is. And even if we did a flex and started at 29-year terms, what a difference it makes over the course of that loan, let alone if you do a 25-year term. I love the 25-year term. And on my refinances, I always sell, here's a 30, but what if you did 25? It's not much different. The 20 can be a little bit bigger based on the size of the loan, but why go all the way back? You're saving 800. Are you okay saving 700? Because you just advanced yourself so far if you could do this, this, and this. And that's what Dave Ramsey did for me. Anytime I do stuff, how can I get out of debt faster? Because I'm going to have to buy stuff. But my wife and I did the financial freedom. It took us 5 years to get out of debt. Now, I still have a mortgage payment, but we have never, ever been, we have been debt free for our cars and credit card debt. My sons have followed in that. And it has allowed us to, if you'll live like no other, you can live like no other. You can invest, tithe, whatever you want to do, but it does give freedoms, but it was hard for 5 years. Not everybody wants to sit around for 5 years.
What actually really sold me on that program was, especially coming in as a loan officer, right? Every time you start as a loan officer, at least most places I've seen, you start off with down payment assistance customers. And I got so used to doing down payment assistance customers that when people would explain to me why they couldn't do something or why they didn't have down payment money or why they didn't do this, I bought their story. I completely understand. I've been there. We've all had, right? But when I started dealing with the Dave Ramsey customers, I was seeing the same exact customer. The only difference was instead of making $30,000 and having $40,000 in debt, these people made $30,000 and had zero debt. And were able to put money down and were able to do the things that they wanted to do for their family because they took that hard step in the beginning. And it made everything so much easier. And that's what really sold me on. I never really bought into the 15-year mortgage. I always told people, because I worked in the crisis, I always told people I can give you a 30-year mortgage. You can make a 15-year payment, pay it down as fast as you want. But you want to have that leeway because I promise you, I was the guy you called when you couldn't make the 15-year payment. There's nothing we accept other than that. So this is a way to do what you want to do in a different way. Still going to save you money, still going to pay less interest, blah, blah, blah. I'll show you how you can do it. But that's what really told me on it.
Back then, I don't remember when this came out because I didn't hear about it till later. But nowadays we have the ability to do a recast on certain loans, like a Fannie or Freddie loan. I don't think you can do it on FHA or VA or jumbo. But, if someone comes into money or you pay it down a certain amount and then all of a sudden you come into money, I think the minimum's like $5,000. But throughout your life, instead of refinancing, but for about $250, you could put a lump sum down and they'll recalculate your payment based on the remaining term. And you can drive it down that way for those people that have those 2.5%, 3% rates. But at the same point, before that, how we did that was taking a 30-year loan and making the 15-year payment. Taking the 30-year loan, doing a 20-year payment, but doing it effectively, waiting 15 years to do it, it's not the same as doing it.
Day one.
You attack it in the first 5 years, it drastically changes the amount of interest that you'll pay because of very little's going towards the principal. That's the time to do it. And here's another thing people don't understand. Your interest rate on a 30-year loan or whatever your loan, you have to, if you pay every single payment without accelerating anything, then they will receive, let's say it's a 7% interest. You have to make all 360 payments, not cheating them of one single payment, because to make that on a fixed contract with a fixed term, they have to receive every payment total to have 7% of that total. So if you can effectively pay it down at any point in time, technically they're going to receive less interest. Maybe they end up only making 6.5 off of you. But people are like, yeah, but I was at 7. Yeah, but that was on the contract. That's not what you paid because you advanced it by paying these payments. You can effectively rob your lender a little bit by cheating them out of that contracted payment. There's a reason why they want you to do a recast, right? They don't want you to pay it down faster. How about we just keep the term where it's at? We'll just reduce that payment, but keep those 25, 27 years. There's a rhyme and a reason why they're doing those recasts. It's not always to your advantage. It keeps the term longer. But yeah, no, I love it. I think things different. I'm always looking, everything's mathematical to me. And so loans are a tool. It's not my life. Will that tool help me accomplish what I want? And if another tool comes along that's lower or better and helps me, then I'll take that avenue too. Sellers right now are paying a lot of closing costs, given a lot of credits. There's not as many buyers knocking on their door. But here in 2 years, if you're waiting for that 5.5 and it gets here, could be 40 people in line with you and the sellers aren't going to be given anything. I mean, people have to be careful what they're waiting for, but I've seen more business, Braxton. January 1st, this has been the fastest as far as imports. Now, when I say imports, not applications, imports when they actually upload to a lender. That means we've got somebody that's setting up to buy or refinance. It's no longer just a thought. We're uploading to a lender that's eventually going to be underwritten. We have record imports between January, February, and so far into March of almost any year, for any year that we've been open, and we've had our second biggest month since September last year when we had the rates drop in February as far as imports. So something's going on. There's some optimism or something that's taking place. If they can keep it going, people are ready, I think. Something's going on.
Well, there's a adjustment period when rates jump up. People have to have a little bit of time to adjust to this is the new reality. Plus, a lot of people figured there was going to be a rate decline at some point that never really popped too much. And I think that the way I look at it, just like you said, is nothing ever gets cheaper. So helping you out by waiting 6 months to a year doesn't normally help you out. You're just going to pay a little bit more. You might have a little bit less interest, but you're going to pay a little bit more in the purchase price. So my theory is once you're ready to go, we'll jump on it and go. Getting you approved, getting you in the mindset of I'm ready to buy, is from what everything I've ever done is very. Once you can tell someone that they're pre-approved, pretty quickly you will get a contract if it's at all possible on the seller side. I always laugh with my wife when I send a pre-approval. I always wait like 30 minutes and say I'm gonna get a call back and they're gonna ask for an extra $5,000 because they just typed it into Zillow. And at the beginning, my wife would go, no. And now she just sits there and waits and goes, you're going to get a call in a couple minutes. And it's always, just because you told them they were approved for $400,000, they pull up Zillow, house is 405, this is the one I want. You kind of, it's one of the things you just get used to as a lender, I guess.
I agree. Has insurance played a role in Texas at all versus California? Florida definitely is paying a little bit of a issue for people.
So yes, Texas insurance has changed quite a bit. To be honest, most of my business right now is in Houston, and Houston is a rough insurance market. I'm probably more keen to Florida than it is to California. Maybe with California fires, maybe a little bit, but I'm actually doubling what I used to quote for insurance. So if I used to quote you $130, I'm going to start off thinking you're probably going to pay about $250 a month, just because I haven't seen an insurance policy below $2,000 probably in 6 months.
It's something's going to have to give there. I don't care if the rates are 3%, but if a house is uninsurable because there's no carriers, or that what is the carriers that are there are there's no more competition. So therefore they can charge whatever they want. A payment's made up of multi things. The interest rate's just for part of that. Property taxes play a role. Obviously, HOAs play a role. And then insurance is now playing a role. Sometimes you have to get separate insurance, whether it's, your liabilities here, your fires here. We're making this really, really difficult. And I don't know if it's this way or not, but I can tell you in California, in order to turn in a contract, you also have to show that you've negotiated or figured out what your insurance is, because they can't have that be a surprise later and go, what the heck? It's $20,000 a year. I thought it was only going to be $1,000 at my last house. It's like, no, things have changed.
Personally, I try to get it the second I get a contract. I say, okay, look, let's find out what what the insurance is going to be. Some cases when I know DTI is going to be an issue right off the bat, hey, let's figure out what the insurance is going to be on this house before we make a contract offer. You're not technically required to in Texas. I would like to see that as a possibility, just because, probably 4 or 5 months ago, I had a customer. I had figured the insurance would be about $150. It was a brand new build in a brand new area, and it ended up being about $375 a month, and that's a big jump for somebody.
Yeah,
and it's kind of hard to, I don't know the insurance numbers. I'm not an insurance guy, but that's a big jump, and figuring out why, and then being able to actually know which insurance companies to go to. Here in Texas, we have Goosehead. That's kind of your go-to if you have a problem with insurance. They can't get it to a good quote. Get to an insurance guy that knows what he's doing, and he's able to help you out a little bit better.
I like that. That's definitely good advice. Goosehead helps a lot of our people here, because from a nationwide standpoint, a lot of people get those, which is kind of cool. If you could give somebody advice for your market, but everybody's advice is a little different because everybody's in different markets. I don't care whether it's a current homeowner who needs to refinance, has built up, and Texas has their own rules, and that's what's a little different too about Texas. But then you got a home buyers who, whether it's first time home buyer or move up home buyer, what advice would you give somebody? You've been doing this a long time. You have an underwriting background. What advice could you give to somebody? You kind of touched on it earlier, but get really specific for me. I want to hear the Braxton Gregg advice.
So generally I start off with, because my dad was a minister, I like to use this line is, I'm kind of your financial priest. Tell me what's going on in the beginning. Let's get everything out. I want to get everything in day one. I want to know. A lot of loan officers I found are scared to ask for documents because they think that, it's going to make some big difference if you find out 6 months from now rather than today. My goal is I want to know everything, all my problems at day one. I want to know how much cash I'm going to be able to have. I want to know how all these different parts of it, because that will help me shape your loan to a way that actually benefits you financially and gives you the best possible outcome. I don't want to go find out midway through the loan that we don't have cash reserves. I don't want to find out that you haven't filed taxes for 3 or 4 years.
People do that?
Oh, yeah. Or my favorite, I didn't tell you about my child support. I didn't think it mattered. Like, yeah, it matters. But all these little things are mortgages are basically just a series of rules. And how we get you through those processes is knowing which rules to avoid for your particular file. And we may pick a product based on half of what you told us, but the other half kills that product. So we've wasted time. We put you in a position that you shouldn't be in because we didn't know the information up front. So my biggest advice is always give me all your information up front. Biggest one, for some reason, I don't know why it is. Even after giving this speech, I have problems with customers not telling me about bank statements, 401ks, things like that. It's like, I'm not trying to take your money. I promise you, I want your loan amount to be as high as it possibly can be and still get approved. That helps me. But I need to know where we are. Reserves sometimes matter. These types of things make a difference in not only the product you use, the rate you get, the terms, everything. The best advice, give your loan officer everything. Day one, it may seem like a hassle, but it's much easier day one than it is day 42.
I hear you. Well, there you have it, people. Mr. Braxton Gregg out of Austin, Texas, of all places, byproduct of California, got an extensive background, answering all kinds of questions, letting you know that there's more to him than just being an incredible loan originator. Obviously, he has a heart. He has a a pulse just like you do, and he's ready to dig in and help. Braxton, I'm asking you lots of questions. Do you have any questions for me?
What advice do you give your customers?
I tell them to run. No, I'm kidding. Run. No, I have a little bit different. I talk to my customers a little bit more on the front before we get into a transaction. I want to know, what are you paying right now? Oh, I never paid rent. I live with my parents. Okay. Have you ever made a $2,000 house payment? Like, show me how much you bring home. Let's have a real conversation, because I don't ever want to waste anybody's time. And I want to have a realistic conversation. Now, you get from that next step, and I simplify it a little more. I start to say, do you understand that we can make a change to your taxes where you can bring home a little more? Because you're going to have depreciation, and you're going to, not depreciation, you're going to have write-off of your property taxes and the interest. And let's take a look at what that looks like for you. You could actually make an adjustment. You can make a very aggressive adjustment and bring home $200, $300, $400 more a month between you and your spouse. We just made up for that $400. We just made up, all that payment's going to be $600, $800 more than what you're used to. Well, we just made up $400 or $500 of that. So it's really $300. Well, I might owe tax in the year. Yeah, but you might not. Why don't we deal with that a year from now, as you get used to being a homeowner? Because something else might happen. Maybe once a year, don't you say you get bonuses? Don't you say that you get raises? Is that going to stop? Let's plan on what's happened in the past to still happen in the future. And let's look at all those things and really see this. Oh, really? You're coming, I want to be self-employed in a year. Well, maybe this isn't the best time to buy. You can't have two different life things going on at the same time. My wife wants to have a baby. Cool, but it takes both incomes to get this going. Is she going to stop working? We need to have a different conversation. I do want to know more, because I want successful homeowners. I want to give financial advice at the same time, the Dave Ramsey approach. I'm not looking to put people in debt just to close a deal. That's blood money to me. The worst thing is having a young couple turn around and lose that house. That isn't helping anybody. I also try and let them know that any given time, it's not a straight line up, but I have never, ever had somebody call me up 5 years later and say, this is the worst thing I've ever done. It's opposite. Time cures any homeowner problem when it comes to value. Even if you have a little bit of crash tomorrow, let's take a look. Just pick any 10-year period that you want. Even these huge crashes, not only did it come back, look where California's at now. Look where the market's at now. It's understanding the history. It's understanding who you're talking to, understanding they're scared, they're fearful, and they're putting a lot of trust in you. I take it one step further. If you really want to know, I'm just going to say it. People might not want to hear it. I'm not accountable to you, Braxton. I'm accountable to one person. And I live my life knowing that I'm accountable to God, basically. And I take that really serious in my life. I feel very blessed. I don't want to screw that up. Why would I take a blessed life and start screwing people over? Instead, I try and over-deliver. I try and over-talk to them so that, ask me anything you want. I have 35 years of experience. I've done many transactions, from multimillionaires to first-time home buyers to investors. You're not going to stump me. Throw anything you want. I am probably the best person in the world right now. This second, you have my full attention. Ask me anything, and I'm going to give you numbers that are backed up by history. I'm going to give you my best estimate of what I would tell my own son and or daughter. I'm not just going to send you off there. If I'm telling my own son not to buy, I'm going to be telling you the same thing. If I don't like that neighborhood, I'm going to tell you, and I'm going to tell you why. There's certain places, I found a place, I wouldn't buy there. That's not going to be in your best interest. Here's why. I'd rather see you buy over here and drive 10 minutes more. This area is up and coming. This one's experiencing issues with their water. Knowing your areas, knowing the behind the scenes things. Everybody sees the house above the ground, but the house is 27 years old. And you're telling me there's not going to be problems there? Let's have a conversation. A lot of people think they got to buy these properties that are on the verge of breaking down. And based on who built it, there's a good chance it could be breaking down. I hate putting someone in a house. AC goes out in the first month of home ownership. The roof leaks. All of a sudden they notice that a wall falls down because somebody added a wall in the house without a permit and no one noticed it. I feel bad for those people because buyer beware, but at the same point, Rich, you tried to load us up with so much information, but yet we still had this happen. I hate those calls. I've gone out of my pocket after the fact, said, I got your air conditioner. There's no way I'm letting you start out with a $4,000, $5,000 bill. I know how hard you work to get. I don't need the money that bad. Take the commission back and make it right. When I take that attitude that it's not about the money, I would do it for free if it means putting somebody in the house. I'm the last one to get paid, and I know they trust me. I put a lot of pressure on myself to give the best information that I can. And I have a lot of successful homeowners come out of that, and they become successful investors because they trusted me before. Their second, third homes, I know because I've got people, I've done 40 loans for them. I treat people exactly how I would want to be treated or the way I'd want my kids to be treated, and that has just been the secret ingredient. And really, you're like, Rich, that's not a secret. Everybody should do that. But yet they don't. I am not a salesperson at all. If I got to sell you, then I don't want your business. I'm not going to compete against other salespeople. They're not in it for your best. They're just trying to close a deal. So that's how I talk to people. That's how I give them advice. Each person's different, as you would probably agree. I have to figure out that person because you're different than the person I spoke to yesterday and last week. And I have to figure out those differences and know who I'm talking to. Some people are very mature at young ages. Some people are not very mature at older ages. And I have to figure out who am I talking to. So that's kind of how I approach my people. And I talk to young people like they're grown-ups. I don't treat them like kids. They're making a real investment. We're going to have a real conversation. And I'm going to back up everything I say. And I'll talk to anybody they want. So, hey, can I get my parents? Can I have this person? Heck yeah, bring them all. I want to hear everybody try and stump me, and I'll bet you I have good answers. And sometimes my best answer is, I don't think you're ready. I don't think you're going to be successful. I don't feel comfortable putting you in a house until I see this, this, or this. You do that, and I'll help you all day long. The guy down the street will do it for you right now, but I won't. I know pretty much what I'm seeing is going to happen. I mean, you got an underwriting hat on, there's percentages based on what you see that you're looking at someone who's borderline already one little crack and that dam's going to break. I don't want to put people in houses that are just riding on the top of that dam because I know the cracks are coming. They always do. So long answer to a short question.
No, I completely agree. I think knowing your audience and being able to sleep at night with how you treat people.
I do sleep good at night.
And that's, that is the best way you can live your life. And I've always found every time you're given sometimes in this business, you're given a choice of what can I do in this situation? And every time I've made the choice that I've gone a little bit more out of my way, it's always been rewarded to me 10 times further because someone recognized, hey, he didn't have to do that. He chose to.
Yeah, I agree.
And I think that's a great way to run your business.
I do too. All right. I have taken a lot of your time. I want to say thank you for your partnership with Xpert. I know you can go anywhere you want, but I appreciate getting to know you a little bit today, allowing other people to capture this so that they can get to know you a little bit. Braxton, thank you so much for meeting up with me, doing this interview. I just want to say thank you for calling Xpert Home Lending home, whether it's for a day or for the next 10 years. I appreciate that anybody would ever work for any platform that I'm associated with. It was designed for the originators because I'm an originator, by an originator. And, I'm excited to get back out with my originators because that's who I relate to the most. And when you're successful, I'm successful. And putting you first, it just comes full circle for me. And when I took on that approach, my whole life changed financially, business-wise. Instead of backing out saying, Rich needs to do this, now make everybody else do this. And it's direct lenders are set up that way. Instead, I flipped it and I said, I'll be the last one to get paid because if you're not getting paid, I ain't getting paid. If you say, Rich, I need to do this deal for free, I'm with you. Make that business decision and I trust it. I don't need any more. You don't need my permission. Do what's right by your people. Hey, that's all I know. I've got 626 people out there doing right by their people. And I know that because of the numbers that we're doing. And you guys have propelled us to, I think, currently 6th in the nation in just 3 years and 1 month. I mean, it's gone by fast. So I'm very blessed and I have incredible people. But Braxton, I want to say thank you so much for your time. And like I always say when I close out Mortgage Ballers, stay thirsty, my friends. Take care, Braxton.
Thank you. Have a great day.
You too.
Bye.